staying in the US, and the Federal Reserve there has issued its third interest rate cut this year. The Fed's split decision to cut reduces the rate by 0.25 percentage point to a range of around 3.6%, the lowest it's been in nearly 3 years. The Australian dollar is trading higher after the cut. The Reserve has signalled it may leave rates unchanged in the coming months.
This further normalisation of our policy stance should help stabilise the labour market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks.
The US Federal Reserve Chair Jerome Powell speaking there. But with more, I'm joined by Radio National Breakfast Peter Martin. Very good morning to you, Peter.
G'day, Catherine.
Now, the Fed voted 9-3 on this, moving rates to that range of 3.5 to 3.75. What reasons did they give for the move?
Well, it was a divided decision. That's the really important thing. The most divided decision in 6 years. And in his press conference that we just heard something of then, Jerome Powell indicated that you get divided decisions when the way isn't clear. But on balance, they decided that with both inflation rising and unemployment rising, that they had to look after jobs. Their goal is to get inflation down to their target. Their target is 2%. To get inflation down to their target over time and to protect the jobs of Americans.
Given how split it was there any indication of what the future might hold? Because I know this time round they didn't have a great handle on, say, price and labour data because of the US shutdown.
That's right. The most recent employment data they had is for September. So they're operating in the dark to somewhat. Their feeling is the labour market's deteriorating. Now, they also poll members and ask them what they think, their best guess as to where rates will be. And basically, they've priced in one more cut. Now, that's very different from Australia, where I think if you polled the members of our Reserve Bank Board, there'd be at the moment, well, saying they don't know and factoring in no more cuts. And here the market's factoring in one more rate increase now next year.
I'll ask you about Michelle Bullock's likely response to this, but if I can just ask about the reaction initially to the rate cut. Usually stocks jump. Is that what's happened overseas?
Well, stocks jumped 0.5%. Also, importantly, the Australian dollar has jumped against the US. Now, this happens because Australia's now a marginally more attractive destination for money with rates lower in the US. This is one of the ways in which interest rate decisions in the US are transmitted to Australia. So the US cuts rates, the Aussie goes up. It's gone up 0.2 percentage point. That at the margin makes prices lower in Australia for imported goods than they would be, and takes a bit of inflationary pressure out. So at the margin, that makes it a bit more likely or less likely that the Reserve Bank will increase rates, more likely that it will cut. But the market reaction is muted because the decision was expected. What wasn't expected is the extent of the division. And the division is that Stephen Mirren, Trump's most recent appointee to the Fed committee, he has recommended a double cut. The third meeting in a row, every meeting since he's been voting, he's recommended a double cut of a complete 0.5% instead of a 0.25%. And two members, last time it was one, have dissented, saying they wouldn't have cut rates at all.
And Peter, rounding out, you've alluded to and touched to what Australia's reaction would be here to this. The Reserve Bank Governor here, Michelle Bullock, what do you expect her interpretation of this to be? How important are overseas and particularly US rates to rate setting here?
Not particularly. What's important is the effect of what happens overseas on Australian inflation. The Reserve Bank Governor will have two more inflation figures. Our inflation figures are monthly now. Two more inflation figures before the Reserve Bank meets at the beginning of February, and an unemployment figure, which comes out today. So that will give her an idea of what to go. I think the fairest interpretation of what she said at her press conference this week is that she really doesn't know. She says that further cuts are off the agenda. That's what she thinks at the moment. But whether there'll need to be an increase, how soon it'll be, or whether, as she said, there'll be a period of extended steady rates, she has no idea. And she, is clear enough in saying that there'll be a lot more data before the bank next meets at the beginning of February.